One of the most important lessons I can give any new or aspiring trader out there is understand that nothing is going to work the same forever. So instead of wasting all that time looking for that super secret strategy, which in reality, it's not actually out there, right? Many of you guys are gonna waste a lot of time not finding it. Many of you guys are gonna find something that maybe works for a little bit, then fails you, right? So stop right now with that mindset. Focus on becoming a good trader. Focus on becoming a good chartist. Focus on becoming a good analyst, right? If you can do that, you're gonna be able to adapt and adjust to different market conditions, and that's how you're gonna become a long-term, consistently profitable trader. No shortcuts, right? There's this saying out there, what is it? If you give me 3 hours to cut down a tree, I'm gonna spend 2 of those hours sharpening the axe, right? Spend that time in the beginning honing your skills, focusing on how to read a price chart, because that is the skill that's going to allow you to have success. And one of the ways that worked for me personally when it came time to really getting away from magic strategy and actually focusing on price action and movement in the market was understanding what I like to call price action or price pattern psychology. Now, that may not be the best term out there, but it's the term I use and it works for me, and this is what it means. Instead of just focusing on what I'm seeing, so red candlestick, green candlestick, compression pattern, expansion pattern, right? I want to really understand why is it forming, right? We know that the price chart is nothing more than a visual representation of all of the actions of all of the participants in the market. That means people like you, that means people like me, that means insiders, big banks, everyone, right? So there is a psychological element to it. Go back to before there were charts, right? The same exact thing. Price moves off fear, greed, supply, demand, emotions, all that fun stuff. So instead of just kind of, taking note cards and understanding double top pattern, triangle pattern, this, that, understand what it means when you see that price action, understand what the participants are thinking and doing. And if you can understand that, you have a much better chance at being able to project the next reaction or the future of the market. Again, we never know what's going to happen in the market ever, but our job as traders is to put ourselves in positions where the probabilities are in our favor and of course execute those trades with positive risk management. Now, if you're new to this channel, what I like to do here is give a little bit of a trading lesson to kind of push you forward each and every week. I also want to share a few of the top 3 trading ideas that are on my radar for the week ahead, and that's what we're going to do right now. Now, during the final pair that we look at today, I'm going to walk you through kind of what I mean by price pattern psychology and break down a pattern that we're seeing in the market and tell you not just what the pattern is, but why it's happening and why I think we'll see the reaction that we do. At some point in this video, I'll also share with you a link to another video or tell you how to get in contact with me to receive a link to a video that breaks down another lesson on how to understand what you're actually seeing in the market. It'll be like a free lesson or something like that, but I'll figure out how I'm going to do that later on this YouTube video. All right, before we get into it, do me a favor, hit that subscribe button, hit that like button if you're new. If you have any questions about anything that's going on in this video, leave me a comment, or if you just want to say, hey, good job, Akil, I appreciate this free video that you've been doing for like a million years, that helps as well. Let's hop into things. So the first pair we're going to take a look at this week, trade number 3, is going to be on the pound yen. And we're going to start here on the daily chart. Now, for you guys that join me in the live room every day this week, or you join the live stream on YouTube Tuesday, Wednesdays, and Thursdays, this was, I believe, Tuesday's trade of the day. And what we were looking for was a counter trend trading opportunity as price action moved into a previous level of structure. The big red box you see on your screen here on the chart in front of you is going to be called our VS1 levels. These are basically a visual support and resistance indicator, and it tells us where past levels of important structures are. And important structures can be kind of tweaked depending on, what you value them to be. But the idea is that it gives us a good idea of what levels we should be paying attention to. And as you can see, price action has entered a pretty significant level. This pair is a perfect example of something I like to say when it comes to making predictions, right? As traders, we want to be predictive in our analysis, reactive in our results, which means that we want to make predictions of what levels are important, what we think is going to happen at that level, but we don't want to just place a trade simply off that prediction. We want to wait until price gives us a reason, a kind of a shift in probabilities that tells us the thing we think is likely to happen is more likely to happen than not. And we didn't quite get that in this scenario. If we go down to the 240 time frame, which is the 4-hour time frame, which is my preferred trading time frame, what I was looking here for was a double top, right? We had a nice 3-bar reversal. Again, we talked about how that was an aggressive entry, or could be an aggressive entry. However, the overall location of the market, at least per my rules, didn't deem that I use an aggressive entry, deemed that I use a conservative one. So I was looking for a double top. We had a really good risk reward, right? We had if we expected a double top up here, risk above here, reward all the way down here. This was a trade I was really excited about. There was only one problem. We never actually got the double top, right? You can see price action came here. Looks like a double top, but does not meet our rules, our qualifiers for double top. Thought we'd get it on the next few bars. This one has a higher high, higher close, so we never got it. So a good example of, wanting to be in a trade, waiting to be in a trade, but price action never actually gives you your entry signal. It never confirms the pattern. I can tell you this, if you're someone out there that isn't trading with rules, this is a perfect example where rules would save your butt. No rules, emotional trading would have put you in a losing trade. You would have lost money for no reason. So enough about the past. The next question is what's next? Well, we are starting to put in a loss of momentum pattern, right? You can look at the slope of price action from all the way down here at 152.5s all the way up. And then we're still putting in higher highs, but you can see the slope has slowed down. The extensions are a lot smaller, right? And we're kind of just drifting up. And if this pattern continues, this is going to be something called a rising channel, or it may end up being a rising wedge. And essentially, that is a loss of momentum pattern, right? We compare that with our relative strength index here at the bottom. You can see the divergence, meaning that our indicator down here is giving us an opposite look of what's happening with price action. And what I would expect is for some type of relief. So some type of reversal again, and maybe reversal is the wrong term. I don't want to say reversal meaning like a full trend reversal. We're going to kind of, crash all the way down to the floor here, but some type of relief, some type of retracement, just as we anticipated before, and a chance for traders to get short. So again, keep in mind, we still are in that zone. So we pop up to the daily. As long as we can do this within basically 164s, this is going to be valid. So nothing that is ready to take right now, but something to watch throughout the week to see how this loss of momentum pattern continues, and if we do get an opportunity for a bearish trade to the downside. Trade number 2 is going to be on the New Zealand Canada, once again starting on the daily. And you can see New Zealand Canada, bigger picture, we're basically putting in the right shoulder of a head and shoulder pattern. If we look at this right here, this is our left shoulder. This down here is going to be our head, and this right here is going to be the right shoulder in a head and shoulders pattern. So that's not what's on my radar for today, but it does work into the overall premise of the fact that we're seeing some type of consolidation in the market. And if you've been following my videos for long enough, you know that when we see consolidation, we should be on alert for potential harmonic, or as we call them, advanced pattern formation. So we're going to pop down to the 4-hour chart once again, and you can see the consolidation that has happened, right? You can see the move up, the move down, the kind of stagnation in the middle. And for many people, this just looks like a bunch of junk. But if you are a pattern trader, there's going to be a few things that pop out to you here. And we're going to measure out some bigger patterns and some smaller patterns, give you guys a lot of options. So let's start with the bigger one. And we always start our pattern with what's called an impulse or an anchor leg, or to keep it simple, just a swing. And in my opinion, especially as a newer trader, right? And this goes hand in hand with you actually learning how to read the price chart, but you should start with the big and obvious things, right? My trading mentor always told me, look for the sore thumb, swing lows to swing highs, and swing highs to swing lows. And for you guys that may not be familiar with that terminology, there's a saying here in America, at least, I don't know why it is, but I remember it from like Tom and Jerry cartoons where they hit them thumb with a mallet and whatnot, but it sticks out like a sore thumb. So the big obvious moves, and there's one in front of you right here. If we look at our starting point right down here at 85.34, this is going to be our X to A, our swing low to swing high. This is going to be our A to B, right? Coming to a 73.1% Fibonacci retracement from that X to A. That means you're on Gartley pattern alert. Cannot be a bat, cannot be a cipher, cannot be a butterfly. Has to be a Gartley. We know that because once again, we have rules for what ratios need to be hit for what pattern formation. We then have a retracement down, or excuse me, up here. And then if price action extends all the way down to this level, we are going to have the completion of a potential bullish bear Gartley. It's going to be, or a bullish bear Gartley. Sorry, a bullish Gartley. Sorry, I'm already thinking about some other stuff. A bullish Gartley. And the entry zone for this Gartley is going to be from right here, the decompletion, all the way to the X leg. So a smaller zone this time because it completes the decompletion is kind of closer to that X leg. And you can see by your risk reward, I'll kind of make these a little clearer for you. Really, really, really good risk reward because of how deep this pattern formation is. So you can see getting over a 2-to-1, which when it comes to Gartley patterns is extremely rare. Typically, we're lucky if we can get a 1-to-1 with the Gartley because the completion point kind of varies a little bit. But pretty decent pattern formation right here. Now I'm going to delete that and we're going to zoom in some. We have another pattern formation forming, right? So inside that C to D leg, or at B to C leg, excuse me, of the Gartley pattern, we're going to have another potential pattern. This is going to be a potential cipher. This small move right here is going to be our X to A, our A to B, our B to C up here, and then if we complete right down here, and this one's going to complete right below the B leg, but I double checked earlier, it does meet the rules. Of course, if it didn't meet the rules, the indicator wouldn't show it. It would say invalid as well. But this is going to be a cipher pattern right here. This is a bullish pattern as well. So the Gartley was bullish, the cipher as bullish. I got one more for you, then I'll draw them out all together. If we start with this leg of the cipher now, we have an even smaller pattern. I guess it's a little bit smaller slightly, but an X to A, an A to B right here, a B to C, and a CD completion right there. So that is going to give us a potential bat pattern. So again, the brilliance of being able to see in between the lines and kind of these hidden patterns is you take something that looks like this, BOJ, bunch of junk, and all of a sudden, right, when you train your eyes, you train your RES to notice certain things, all of a sudden it transforms into something that looks like this. 3 potential bullish advanced pattern trading opportunities for you. Before we get into our top trading idea of the week, just to touch again on the idea of continuing to evolve and adjust and adapt as a trader, make sure you check out the Trader Coffee Break episode that myself and Jason Greystone did this past Wednesday, where we talk about post-trade analysis, right? Everyone talks about pre-market analysis, but no one really likes to talk about the dirty, boring, grinding type of work that's going to take you to the next level in your trading. If you want to continue to evolve and adjust yourself, adjust your strategy, adjust your system, that post-market analysis, that post-trade analysis is crucial, and we talk all about it in that coffee break video. So link is below. Check it out. Now let's hop into that #1 trading idea for the week ahead and talk a little bit about price pattern psychology. So my #1 trade of the week is going to come here on the Euro Canada. When I say #1 trade on the week, it doesn't mean it's the best trade or has the highest probability of happening, and meaning it's the one that is the most educational, so it makes for the best content here, but also happens to be a very good trading opportunity. And in the previous setup, we looked at 3 advanced pattern formations. We looked at a Gartley, we looked at a cipher, we looked at a bat. Those are all 3 patterns that I trade. In this situation, we're going to look at what's called a butterfly pattern, which is interesting because I don't personally trade it, yet it is the pattern formation that I understand the most when it comes from a psychological perspective. And before we even get into the butterfly pattern, let's start off by taking a bird's eye view of what's happening in the market. And you're going to see right here, again, go back down to our VS1 levels. This time they're in purple because I switch them up per chart. We have just broken, we ended the week with a break-in close below a previous level of structure. So if you're familiar with how we teach about reading trends and violations and all that fun stuff, when we see a break and close below, or I should say this, when we identify a break and close below, it allows us to predict that price action is likely to continue lower. So looking at your chart right here, this screams bearish continuation, bearish continuation, bearish continuation. However, one thing we need to pay attention to is, again, the overall lay of the land. That's why we always start on a higher time frame. And on our higher time frame, we're not worried about trading. We're just worried about seeing where everything is. And what I want to do is I want to look back and I want to see is there anything that I may potentially have missed here as far as like past structure. So we have a previous level of structure right here that we're heading to. This spike right down there, short-lived spike, but a spike nonetheless. And what we're gonna do is we're gonna keep that as a reference point on our chart for our recent price action. Because again, we wanna know where the limits of price are at. We're gonna have two opportunities on here, right? One is going to be that butterfly pattern I talked about earlier, which is gonna be a counter trend trading opportunity. So one that we would look for a bullish move. The other one is gonna be a continuation opportunity down to that level of structure. So kind of a 2-for-1. So let's go down to the 4-hour chart. Once again, we can draw in our previous level of structure right here and our break. And you could this actually could be one that you can combine as both, but we'll can talk about that later maybe. But what we're looking for here, first and foremost, from a continuation standpoint is simple. My favorite type of trade, a pullback trade, right? Previous structure support has been violated. Once support is broken, I would anticipate that it now becomes resistance. So if price action can retrace, right, get a little bit of relief and retrace back to this level, our kill zone being right here, previous structure low, previous outside return, then you can look for a pullback trade in anticipation of that lower structure zone down at $1.36. So a nice little bearish continuation trade right here for anyone that is a quote unquote trend following trader. The other opportunity here is going to be a butterfly pattern. And butterflies are interesting because you can trade them in different types of ways. But let's take a look at it. Wrong tool. One that forms like this. X to A to B, B to C, and then a C decompletion down here. And that decompletion is going to be at the 127 inversion. So taking my Fibonacci extension, measuring it backwards from the A leg to the X leg. So swing high to swing low and back up. And looking at that 127, ooh, almost dead on. Right there as being the completion point for the butterfly. Now, the interesting thing about the butterfly, well, let's say this. The thing I hate about the butterfly is that from a structural perspective, it doesn't make sense, right? In the previous patterns that we looked at, if I go back to, what was it, New Zealand, Canada, right? You'll notice all of these patterns complete within a structural range, right? We have the bat here that completes within the X leg. We have the cipher here, which completes within the X leg. We have the Gartley here that completes within the X leg. When we go to the butterfly, you're going to see that it completes outside the X leg, right? So for me, structure is the backbone of my trading philosophy. Everything I do is based on structure. This is supposed to be the important part, right? As we spoke about earlier, if structure is violated, I expect a downward movement. So in the case of a butterfly pattern where we're looking for a buying opportunity here, I'm expecting a downward movement because price was violated, yet I have to get bullish because of the butterfly pattern, right? You can see the contradiction there, right? The conflict in interest. But what's interesting about the butterfly pattern and the psychology behind it is that it's a relief pattern. So think about it like this. Once previous structure is broken to the downside, we can anticipate a continuation lower, right? So the bulls, the previous bulls that tried to fight off this level, they were defeated, right? And the bears have taken over. So not only did the bears continue their dominance from above and break this level, but you're going to have two things happening. You're going to have new bears joining the market, right? Half of those bears, I shouldn't say half, but some of those bears are going to be new bear sellers that are sellers because we broke this level of structure. And we're like, ooh, structure got broken, time to sell. Another portion of those bears are going to be the previous buyers because guess what? If you are a buyer at this level, what do you typically have below this level? A stop loss, right? And if you're a buyer and you have a stop loss, it is a sell stop. So now you have sellers from before, you've got new sellers, and then you got buyers that have become sellers because they're trying to exit a losing position. So you have a lot of selling pressure in the market, and that's what pushes the market down. Now, why are we in, what's the power of the butterfly pattern? Why anticipate a move down here? Well, it's something called profit taking, right? Sellers are only going to be sellers for so long. And again, this goes hand in hand for your overall prediction, and everyone's prediction is going to be a little bit different. But what you're banking on here is essentially this, right? Price action has pushed down, the sellers have won, the sellers have gotten to a level where they're looking to take some profit, right? They've made this move, they defeated the buyers. Let's, let not get too cocky. Let's put a little bit in our pockets. And again, if you are a seller and you want to collect profit, you need to exit your selling position, whether it's partial profit or full profit, you need to have buy orders on, right? So you get that little bit of relief, just like we spoke about with pound yen, a little bit of relief from just lack of sellers because it's already pushed down that no one wants to sell at, or not as many people want to sell at this cheap in comparison to up here. And then you get some sellers becoming buyers. And of course, you probably get some other buyers that think this is a good level as well. The point is you get a little bit of relief in the market, and we push back up to that previous level, and then the battle starts over, right? The buyers and sellers will battle again, and the price chart will tell us what has dominance. So that's kind of the psychology behind the butterfly pattern. I know it may not make sense to a lot of you, especially if you're brand new, and it doesn't need to right now. That's something you can go back and rewatch and revisit after you kind of have a firm base of the real foundational elements of learning how to read price. But in my opinion, I felt a lot more comfortable during my journey in reading price action and understanding why things are happening once I stopped looking at the price chart as just being like red candle, green candle, and I started looking at it from the perspective of what are buyers doing, what are sellers doing, who's interested here, who's interested there, who won the battle, who lost the battle, who's getting out, who's getting in, stuff like that. It kind of makes you earn trust in what you're looking at. And we know that trading, right, with all the emotional and psychological mistakes that happen down there, it's all about earning trust in yourself. It's all about earning trust in your system. It's all about earning confidence, right? It's one thing to know what you're supposed to do. Trust me, especially when you start trading live, it is a whole different story to actually do it once those emotions run hot. So having that firmer understanding of what's happening in the market, it's very similar to giving a speech, right? If you're in front of 1,000 people giving a speech and you're not very confident in what you're talking about, there's going to be a lot of maybe, kind of, right? A lot of nervous energy, and you're not going to really have a lot of confidence in what you're delivering. If you're giving a speech in front of thousands of people and you are an expert, you know exactly what you're talking about, you're up there with a lot more confidence because now you're the man, you're the woman, you have the most knowledge in the building, or at least enough knowledge that you feel 100% confident in what you're doing, and you're more likely to deliver your message in a much better way. So trading is very similar. So just think about this way, to put it short. Again, butterfly is interesting because what you're doing is you're basically playing the reaction of sellers taking profit, so less selling interest, maybe a rise in buying interest. Again, a little bit of relief, not a full-blown reversal. And then you can even take this, right? Depending on how far we retrace, you can even look at this reversal and then trade the next leg down to that lower level of structure that we noted out from the higher time frame. Cool, right? So as promised, I do want to share with you that long form training video on price action psychology, not just understanding what the market is showing you, but really creating a story for why it's happening and what it means. If you want access to that, you can do one of two things. One, hit me up on social media, Instagram, Twitter, what else am I on? Facebook. Just shoot me a private message, say, hey, Akil, saw this week's video. Can you shoot me a link to that training? Or just shoot me an email, akil@tier1trading.com. Say the same thing. Hey, Akil, give me training, and I'll shoot it your way. I don't want to unlock it here on YouTube because I only want serious traders to check it out. That's why I'm asking for you to kind of contact me through those other ways. All right. Lastly, we got another big workshop coming out. I don't have all the promo material yet, but it's going to be early, mid-April. So coming up soon. If you're subscribed to the channel, if you're in the loop of what I'm doing here, you'll hear all about it. But it's going to be one of the biggest ones we've ever done lengthwise, and it's going to be in a new type of format. That's all I can tell you right now, but stay in the loop, subscribe to this video, hit that notification bell. I'll let you know more details about how you can sign up, how you can get access to it. If you're new to the channel, it's 100% free. We don't charge anything for these events. We just give you lots and lots and lots of content to help push you along that path of becoming consistently profitable traders. So until next week, plan your trade, trade your plan, subscribe, like, comment, enjoy your weekend.